discussing Tesla earnings Q3 2024. Very, very positive. Positive on almost every note. What's most important about this company right now is that a lot of things that they've been working on are actually starting to show fruition in products and also in financials. And this is, for people that wonder how Wall Street works and sometimes maybe are frustrated or just confused, the purpose of this podcast is to give people a sense for what it feels like to run a hedge fund. And I think it's important to understand how markets work. This is not just some sort of nice to have, because when you're in the markets, very often you misread price changes as the truth, and you shouldn't do that. Like, it's incredibly important to straddle the fine line between what the market is telling you on a daily basis versus what you're seeing in a company for equity investors, but in general for investors. And Tesla is a great example, because Tesla has been telling us a very consistent story over years that they're driving sustainability in transport by proliferating electric cars, and they're also driving autonomy, because what they want to do eventually is supplant or even replace owning a car with Cybercabs. Because what they're really trying to solve is transportation, car-based transportation, let's be clear. So they're not solving intercontinental air travel, they're not solving coal transportation on trains or anything like that anytime soon. But what they're trying to solve is person A to B transportation that is today done by car, mostly private, and some of it with cabs and Uber. That's what they're trying to solve. And the way they're going to solve it is by lowering the cost per mile and giving you a lot more value in terms of comfort and the ability to watch movies or play video games while you're in a Cybercab and things along those lines. So that's the fundamental strategy, and it's been there for a while, and it hasn't changed much. But what we're seeing now is some traction. We see improvements in FSD, which is the key, autonomy. We see success in designs, whether it's the 3 and the Y, which are the best-selling cars in the world, whether it's the Cybertruck, which is turning into the best-selling pickup truck, or whether it's these new designs like Cybercab that overall have a positive feedback. We've just seen it once, we've driven in it and things like that. We've been driven in it, to be clear, because it doesn't have a steering wheel, so you can't really drive it. But, all these things are positive. So overall, that's what this earnings call has transpired. There's positivity across the company, across the business, and it's showing in products, in numbers, in volumes, and there's a little bit of macro tailwind also. We have a better situation in China because they're doing some subsidies there. Not subsidies, but macro promotions, because the economy is really bad. We have a little bit of lower interest rates in the United States, which is also showing. So all of these factors come together to move the stock to where it moved today. A very, very strong performance of the stock, over 20%, which is huge for Tesla. It's $100 billion in market cap. But more importantly, I think it's a validation of the company's strategy, which is now showing in products and numbers. This is not in our podcast. It's October 24, 2024. This is Crim Telco. For the day, the fund is up 15.7%. The market is up roughly, is actually down 0.5%. For the year, we're up 31.3%. The market is up 21.8%. We are outperforming by 9.5%. The performance comes from Tesla, and I'm going to discuss the earnings call. So this should explain also the massive outperformance we had today. So Tesla announced earnings. They beat on revenue, on earnings, and really, really exciting margin story. And let me parse all of these numbers first, and then talk about the more strategic positioning of Tesla and the way we see it. So the numbers are this. Like, we have a pretty good margin situation, much better than expected, driven by 3 main factors. One is FSD adoption, one is Cybertruck turning gross profit margins, and one is also higher credits. So we're going to get a more detailed explanation of credits and FSD adoption, just to tame a little bit the excitement here. FSD adoption can be two ways, one good and one maybe not so good. I mean, it's still good, but not so good. The not so good one would be that we have revenue recognition from deferred revenue, which comes through release of features in FSD, that these are one-offs, which means that you've already signed up and paid for FSD, but the revenue hasn't been recognized fully because you haven't launched all the features that you promised. And now you're launching those features, so we're releasing more revenue. That is a one-off, helps margins, but doesn't necessarily, it's not continuous. It's good, but not continuous. The good side of FSD adoption could be that we have higher adoption, which is higher subscription or purchase, and that drives margins. That, of course, would be phenomenal. So my guess is it's a little bit of both, and therefore we're going to have a generally positive reaction on this also when the 10Q comes out. The Cybertruck gross margin positivity is huge because it's one thing, it's very good for numbers, but much, much more importantly, it validates the product. Okay, don't forget, we are still in a ramp-up phase of a radically new product. We're used to this from Tesla. Like, they come up with stuff that nobody has ever done before and so on and so forth. But let's not always assume that it's going to work. Cybertruck is working. It's selling at scale. So there's two factors here which are important. One is that we have demand. Now, you might say, okay, but this is not real demand. It's like sort of early mover, energy enthusiasts. But I think, you would see we have, tens of thousands of cars now sold, trucks sold. If there was an issue with demand, we would see it. So there's no issue with demand because it's a great vehicle. And more importantly, also the quality and the performance and things like that are also good, because we could also see a deterioration there. We could see a situation where maybe there's too many recalls or things don't work. And like, this is a new technology. As much as Tesla is doing with engineering, and as good as they are, they're not, walking on water. So in other words, they can make mistakes, and that there was a rather large risk associated with that, which I think has been mitigated also with this call. So those are the main factors. Third, credit. Now, my view on credits, and that's controversial, is that is actually a good thing, and the more the better. And here's why. People on Wall Street have this perception that the ZEV credits are somehow one-offs and we shouldn't count them and so on and so forth. But that's not true, because the ZEV credits, the mechanics of the ZEV credits are the following. Tesla is selling large volumes of cars, and they get ZEV credits for that that they can't really monetize because they don't have ICE cars. In other words, it's kind of like an asset that they can't use, but they can sell, because another car company, for example, Fiat or GM or whoever, Volkswagen, they sell a lot of ICE cars, and therefore they can't meet their CO2 emission standards, and they can buy ZEV credits from Tesla. So this is how this works. And I think there's two factors which will make this a permanent stream of cash flow for quite a while. One is the high volumes of Tesla. In order to really make a lot of money with ZEV credits, you have to have high volumes of electric cars. And there's only one company which sells millions of electric cars, and that's Tesla. So at scale, it's only Tesla that can really do it. And if you're Fiat or GM or whoever, you're not going to go with, I don't know, Rivian or companies like that, or I don't know, whoever else is, Fisker or stuff like that, because you're not even sure that they can have the volumes that you need to offset your ICE cars, right? You're not sure about that. So Tesla's the only company that has that security. And so that's one factor which is incredibly positive for Tesla. So they kind of have a monopoly on selling ZEV credits just by sheer size. And the other side is, well, you could say, well, at some point they will stop buying ZEV credits because they'll have enough of their own electric cars, or they'll be able to reduce their CO2 emissions. Wrong. People still in the traditional IC business make the money the old way, which is they sell bulky SUVs and things like that to customers that like these kind of things. Or even like, the German car industry is selling very high performing, high CO2 emitting limousines and things like that. So there's going to be a lot of demand, and this is not going to stop anytime soon. So therefore, we believe that the ZEV credits are here to stay, and we're just going to see increasing numbers, actually. That's controversial. We could be wrong about this, but this is also something that gives us a lot of confidence when it comes to Tesla. Now, let's talk a little bit about generally the feel and the strategy where Tesla is. In our opinion, the main contributing factor to the Tesla success story is going to be unsupervised FSD, which means that you can have a product that is native to FSD. You can have a car that drives itself, and therefore you're going to have a tremendous amount of additional software-driven services, but real physical services, right? For example, you can send the car to pick up your child. You can drive and sleep in the car. So let's say tomorrow you're going on a business trip to LA. You don't have to fly. You can just sleep in your car. You leave at 5 a.m. in the morning, and the car drives you to Burbank. Like, things like that are possible. That's what we call native FSD. So these are things that are only possible because FSD exists. Think of you sent the car to pick up your child from school. You sent the car home so your wife can take it somewhere. Your wife lands at the airport. You don't have to go pick her up. You just sent the car, and then she drives home with the car. You go to the dentist in downtown San Francisco. You don't have to look for parking. The thing just drives itself and parks somewhere. Those are native FSD products that, in my opinion, will drive demand, and also not just for the car, but for FSD. Let's not forget, this is all possible in a $30,000 to $40,000 car with a hardware that is installed, that is updatable. You don't have to, other than the hardware 3, hardware 4 situation, you don't have to upgrade. You don't have to pay thousands of dollars for some sort of special chip. None of that stuff. You can just, we underestimate the low cost nature of this product is tremendous, because not just that they offer you something which is almost science fiction, but it's at low cost. So, sometimes we can have really nice things, but they're expensive, and we're like, yeah, nice to have, but we can't really afford this stuff. This is not the case. In this case, we can have this at low cost. You can buy a car for $40,000. You're a college grad. You pay $300-400 a month for your Tesla lease, and the thing drives itself. That is going to drive adoption. That's why growth is expected to be strong, and that's why we think that Tesla is going to have the 30, 40, 50% growth again anytime soon. Actually, Elon Musk made a sort of soft guidance where he guided for roughly 20 to 30% growth next year in vehicle volume. Take this with a grain of salt, but I guess my point is, this company is coming back to growth, because a 30% vehicle volume growth would mean at least a 50% EPS growth. And that, of course, is huge for Wall Street. That's how Wall Street works. It's very mechanical. When you have a 50% EPS growth, you can have 50, 60 times earnings, and that's why the stock has also done extremely well today. Now, again, let's take this with a grain of salt. We're not going to now just mechanically say, oh, they're growing 50% again, so we can give them 100 times PE or something like that. That's not the case here. The point is that we're back on track. This is what's so important. And again, we have the ingredients. They're showing in real products, in real demand. It's performing. The engineering is working. The software is working. and regardless of all the risks that are still there, particularly on FSD, of course, let's be clear. You know, one accident can change this whole thing. It is politically very charged. Of course, we're living in quite difficult times right now politically because of the election, and no matter what happens to the election, it's expected that there's going to be repercussions, and Musk is very involved. So all these things will matter. All these things will matter. But what ultimately wins is the product. And I just spoke about this in the ANSYS presentation that I gave just 1 or 2 episodes before this one. What it takes to win in real-world AI is first and foremost the guts to invest massive amounts of money and intellectual power into data pipeline and compute infrastructure. And that's what Tesla is doing. So to summarize this part of the earnings call, what Tesla's been working on for years, which is new products, new futuristic products, Cybertruck and Cybercab and FSD, it's showing traction, and we are this is not just words anymore. It's not just believers. So like we said that after the Cybercab presentation, you have to be a believer. It is more than just a believer now. We have some real tangible results in terms of numbers, in terms of demand, and in terms of products and cost. A couple of other things to mention, the Semi also, and let's not forget the Semi. I think that's a huge positive for Tesla and also for the community, to be honest. We have this massive CO2 emissions, energy waste, noise, accidents, all kinds of things happening because of large semis and things like that. And that is also in the works. We are incredibly excited about the Semi, but we also believe that some of the solutions, such as, for example, higher energy density and higher power density, still need to be solved. They're working on this, and they mentioned also they had some positive notes on that one. Then there is the energy storage, which is a very good story. Now, on energy storage, the way we see energy storage is that is a great business. It's very important. We spoke about this in the Joanna Nelson Wheeler presentation. Energy storage is key for renewable energy future. But, of course, there is going to be competition because lithium ion, in my opinion, I mean, this is our opinion, lithium ion is probably going to be a temporary solution to the storage problem in a sense that you will have probably better technologies, better chemistries than lithium ion, because lithium ion was not developed for this. Nevertheless, for a while, it's going to be an adjacent product with high margins and high growth until better solutions come to market. So to summarize, the earnings call has been incredibly positive on many fronts, in particular on the front that we have real traction for some of the main factors that drive the Tesla story, which is FSD and new products such as Cybertruck and Semi, and also the energy storage products are growing with high margins. Thank you.